Hello and welcome back to Global Value. In today's video, we'll be performing a fundamental stock analysis of the Hershey Company, ticker symbol HSY. At the time of recording this video, Hershey is trading for $210.55 per share. Year to date, they're up 9.5%. Over the past year, they're up 21%. Going back 5 years, they've returned 13% compounded annually. Going back 10 years, that's about 12% compounded annually. And since 2005, they've returned about 8% compounded annually. Keep in mind that this stock return does not include the dividends that they paid out over this period. So Hershey is about $20 off of its 52-week high. They're up quite a bit from their 52-week low. Hershey is a large business. They're a $43.5 billion market cap company. If you're like me, you probably love at least one of the Hershey products. Hershey is a leading confectionery manufacturer in the United States, which is nearly a $25 billion market. It controls about 46% of the domestic chocolate market. Beyond its namesake label, the firm's mix has expanded over the last 85 years and now consists of over 100 brands, including Reese's, Kit Kat, Kisses, and Icebreakers. Hershey's products are sold in about 80 countries, albeit with just a high single-digit percentage of sales coming from markets outside of the United States, including Brazil, India, and Mexico. The firm has sought inorganic opportunities to extend its reach beyond its core confectionery business, adding Amplify snack brands and its Skinny Pop ready-to-eat popcorn to its mix, as well as Pirate brands, which includes the Pirate's Booty, Smart Puffs, and Original Tings. They've acquired these businesses over the past few years. Some form of Hershey's products is available at nearly every retail store in the United States, grocery stores, and these products are the bad boys that stock vending machines. The company was founded in 1894 and is headquartered in, you guessed it, Hershey, Pennsylvania. We'll be performing a modified 8-pillar analysis as popularized by Everything Money, taking a look at 8 different financial metrics to come to a holistic beginning understanding of Hershey and its business. So let's get right into it. Starting off with pillar number 1, we want Hershey's average trailing 5-year PE to be below 22.5. So currently they have a 27 PE. Over the past 5 years, their PE has been about 26. So just over that mark, not too bad, but that's still an X to start off. Pillar number 2, we're looking for their average 5-year return on capital to be above 9%. Hershey does a great job of earning high returns on capital. Averaged out over this time period, they earn about 29% average returns on capital in a year, which is about 3 times that 9% metric we're looking for. So that's a big check on pillar number 2. Hershey, with its great brands in the confectionery business, is able to earn very, very high returns on capital, especially for a business that's over 100 years old. Pillar number 3, we're looking for 5-year revenue growth. They've done this. They've grown revenues, albeit slowly and steadily, from $7.5 billion in 2017 to nearly $9 billion in 2021. Pillar number 4, we're looking for 5-year net income growth. Net income is going to be this column in white. So they've grown net income from $783 million in 2017 to nearly $1.5 billion in 2021. So back-to-back checks on pillars 3 and 4. They've nearly doubled their net income over this time period. So great signs there. Moving on to pillar number 5, we want them to be decreasing their shares outstanding. When you purchase a stock, what you're really buying is an ownership percentage in a business. And so by buying back shares, a business is going to be increasing that ownership percentage for you so that you don't have to spend a dime and that you ultimately have a higher ownership percentage of the profits that that business is going to generate. So Hershey has bought back about 6 million shares over the last 5 years. Not a lot of share buybacks here, but it is good to see them, slowly but surely returning capital to shareholders and increasing the ownership that existing shareholders have. I think a more important sign here is that it's good that Hershey is not issuing new shares over this time period as they're making new acquisitions and diluting existing shareholders, because that can be a recipe for disaster, and that's often a silent killer for investors over the long term, especially in a very well-established business like Hershey that has these great brands and that is already going to be a powerhouse of a company. You'd be hard-pressed to find an American household that doesn't either A, know of Hershey products, or B, enjoy them. And so we really don't want them to be issuing shares. It's a good thing that they're not. And so pillar number 5 is going to be another check. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's this column here in green. Free cash flow can be used to pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest into the business. So Hershey does a great job. They've grown their free cash flows from $991 million in 2017 to nearly $1.6 billion in 2021. So that's a check on pillar number 6. Looking at this free cash flow profile, the business does not have to employ a lot of capital expenditures in order to generate cash from operations, meaning that the company is able to gush out a good amount of free cash flow each and every year. So that's a hallmark of a great business. And so far, it's shown up here both looking at their cash flows and looking at their returns on capital. The other thing we want to take away from this is their average 5-year free cash flow. So over this time period, Hershey has averaged about $1.3 billion of free cash flow each year. So we'll use that when we're evaluating how the business utilizes leverage and how the business's market cap compares to its free cash flow. Pillar number 7, we want the business's net debt to be below their average 5-year free cash flow multiplied by 5. So at the end of 2021, Hershey had $5 billion of net debt. When we multiply their average 5-year free cash flow of $1.3 billion times 5, that comes out to $6.5 billion. So if they had 5 average years in a row and they kept this net debt the same, Hershey would be able to pay off all of their debts and still have $1.5 billion left over in cash. So that's a check on pillar number 7. It's a sign that they're able to generate very healthy amounts of cash flow and that the business is not over-leveraging itself. So last but not least, the big pillar of them all, pillar number 8, we want the business's market cap to be below their average 5-year free cash flow multiplied by 20. So Hershey has a $43.5 billion market cap. When we multiply their average 5-year free cash flow of $1.3 billion times 20, that only comes out to $26 billion. That means that pillar number 8 is going to be an X, off by about $17 billion here. Lastly, I want to look at the health of Hershey's dividend. So Hershey pays out a 1.6% dividend yield based on their current stock price. So we want to look at if this dividend is supported by their free cash flows, how this dividend has been growing, and then is it healthy overall? So we can see that in all 5 years, Hershey has increased their dividend, and in all 5 years, they've had plenty of cash to support that dividend. Their payout ratio, as they're generating more free cash flow per share, is remaining about the same or even slightly going down as it was last year. So Hershey generates well and above the amount of cash flow that they need to pay a healthy dividend here and now on into the future. It would be very, very unlikely for the Hershey Company to go away at any point, given the nature of their business and how ingrained their confectionery brands are in the mind space of American consumers. Even with trends like health consciousness kind of working against the business, Hershey is a great company. It's a classic Americana type business. They've got a whole town where the street lights are shaped like Hershey's Kisses, so I don't think this bad boy is going anywhere. So in summary, the Hershey Company checks the box on 6 out of 8 pillars. They're a great classic American business. Warren Buffett has called them a great business. They have great brands, a great moat, and that really shows up through their very strong financial fundamentals. They're only off on our valuation metrics, which is not surprising in these times of potential market turmoil and high uncertainty. While really, as value investors, we don't know what the market's going to do one way or the other, it's common to see people pile into these very high-quality businesses during times of uncertainty, and ultimately that can drive the price up to outpace its fundamentals. So while Hershey is a great business, they've had a healthy and sustainable growing dividend, they are off on those valuation metrics, and their free cash flow profile, while it's good and in great shape and still growing slowly and surely and steadily, it's still off by quite a bit compared to their current market cap. So remember that this analysis is just a starting point. It's not a financial recommendation one way or the other. If you're interested in the Hershey Company, I highly recommend that you do your own homework. You perform further due diligence by learning more about the business. Take a look at their history, even going back to seeing how the Hershey Company was involved in things like World War I and World War II. It's really fascinating to learn about the business. There's been a book that was recommended to me called The Candy Wars that documents some of the rise of Hershey and how it's kind of progressed throughout American history. And just like any other business, be sure to read through the company's filings, dive into a 10K, and read their annual reports to learn more. Well, guys, that's it for today's video analyzing the Hershey Company, ticker symbol HSY. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. The Hershey Company was a subscriber request, so I'm really happy to make a video on it. Thanks for learning about Hershey with me, and have a great day.